Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. The title of the video is Elliott Wave Explain Step 1. Elliott Wave Explain Step 1. Alright? In this video, we're going to explain, the wave theory, alright? The interpretation of the wave theory, a specific, aspects of the wave theory. We will try to explain it. What do I mean by explain it? Alright? We will, apply the Elliott wave rules, alright? We will deduct from the Elliott wave rules to make, forecasts, to make trading decisions, alright? The rules that we're going to explain now about the Elliott wave, the Elliott wave theory, alright? The rule we're going to discuss in these first steps is about, the first Elliott wave extension, alright? So we know that according to the Elliott wave rules, one of the rules, about the Elliott wave is that the motive waves can be extended, alright? So we have the first Elliott wave, the third Elliott wave, the fifth Elliott wave. These are the motive waves. Alright, but when we are talking about motive wave, we shouldn't forget the motive wave itself. Don't get confused. Alright? The motive wave itself is a wave 1, 2, 3, 4, 5. It's a motive wave, alright? That's the motive wave. If you hear me in this video, I say motive wave itself is wave 1, 2, 3, 4, 5. The trending phase, okay? But the first wave, the third wave, and the fifth wave are motive wave also. Don't get confused, okay? Don't get confused. Alright? So we know that the motive waves can be extended. Alright. Now, talking about the Elliott wave explain step 1. How do we apply the wave theory to make trading decisions, to forecast the next price move when the first Elliott wave is extended. So as you can see here, I don't want the video to be too long. You can see that I draw my line. This is my first Elliott wave, the second wave, the third wave, the fourth wave, and the fifth wave is underway now. Now, traders very often disagree when it comes to wave counts. My only defense when a trader says to me, Joe, this is completely wrong, I say to them, this is my wave count. So if you have been following me for some time, you know that I always say that in every video, okay? So feel free to disagree with me. Feel free to bang the table, all right? So it's okay. But the most important thing when we are counting Elliott wave or when we are interpreting the Elliott wave, when we are explaining the Elliott wave, when we are applying the Elliott wave, the most important thing is, the market pattern, the three market pattern, all right? So, the rising channel, the declining channels, all right, and the horizontal channel, all right. So, the trending, are you trading against the trend? This is very important. Your wave count can be wrong, but if you are not trading against the trend, you can make excellent decision, okay? So, when the first Elliott wave is extended, all right, you see here, it's extended, beautiful, isn't it? The pink line here is extended, all right, it's extended beautifully, followed by the second wave and the third wave. So now, the rule also says that the third Elliott wave should not be the shortest wave. So, I'm combining two rules here, so don't get confused. The first Elliott wave is extended, which is okay because we know that the first wave, the third wave, and the fifth wave can be extended. Yes or no? Great. Now, the first wave is extended. Now, as we have the second wave and the third wave is underway, we also know that the Elliott wave stated that the third Elliott wave should not be the shortest wave. So there are two rules. wave extension. First wave, third wave, fifth wave can be extended. And also another rule that we know, so when we are applying one rules, we shouldn't violate another rule. This is the Elliott wave, otherwise the Elliott wave will contradict itself. So once the first Elliott wave is extended and the third wave is underway, so what we can do, my friend, is this. So we say, okay, the third wave is underway, but the first wave is already extended. So our minimum target is the length or the magnitude of the first wave. So we can use the length or the magnitude. What I mean by the length is this: the direction of the price. I draw the blue line here. The magnitude is the height of the price move from X price to Z price, something like that. All right. This is the magnitude. This direction. All right. This is what I mean by magnitude. All right. This is the length. Okay. So, as the third Elliott wave is underway, in this case, because it's a diagonal move, it's a diagonal, beautiful, normal progression, I would prefer to use, the length. You can see you will have sometimes problem like this. In that case, you may have to adjust the line a little bit to make it parallel, you see here, to this one, something like that, all right? It's just to set a price target for the third Elliott wave, But it does not mean that the third Elliott wave will definitely reach that point, because the first Elliott wave has been extended, all right? But the third Elliott wave can be shorter than the first wave if the first wave is extended. The only rule is that the third Elliott wave should not be the shortest wave, But the third wave can be shorter than the first wave and the fifth wave, but it cannot be shorter than both together. Otherwise, it will be the shortest motive wave. Don't get confused. Don't get confused. You understand? So, for the third Elliott wave to not be the shorter wave, it shouldn't be shorter than the first and the fifth together. All right? So, either it will be shorter than the first or shorter than the fifth, but not both together, Otherwise, it will end up being the shortest motive wave. So now, as I use my measuring stick like this to set a minimum target, that the price does not have to, but I also understand that the third wave can be shorter than the first wave. In this case, because the first wave has been extended, there is a high chance that the third Elliott wave may be shorter. It can be longer, even though the first wave is extended, can be longer. The third wave can still be longer than the first, even though the first wave is extended. Can be equal. So as the third Elliott wave starts here, it can be equal to the first wave. It can be shorter than the first wave. It can be longer than the first wave. So we are prepared for the three scenarios. Can be equal. This is target. I can use the magnitude as I show you now to set my target. All right. So if I'm using the length, I say we'll see. All right. Can be equal, which is I've done now. Can be shorter. So in that case, I will just, leave it like that. Can be longer. In that case, you have to check the fundamentals, because for it to be longer, you must have some excellent economy news, major economics, some innovation, something going on big time with that company. Because you can see here, the first wave is quite extended, This is from 2012, 2014, 2 years, boom, 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 up. It's quite long. Quite long. You see, you have to consider the time and the magnitude of how far the price went up. So now here we are. We know that in this case, the third Elliott wave was shorter than the first. You see here, the green line is shorter in this case, followed by the fourth wave. Now, one thing you need to understand, because the wave count is dynamic, at this point in time, you see the price like this now. We are thinking that this is the fifth wave underway. But we can also have a complex fourth wave. But at this point in time, please understand this. Otherwise, if you are using Elliott wave, I know a lot of Elliott wave traders are very proud traders. They don't want anybody to tell them anything, and everybody doing their own thing. You'll see a lot on the internet, okay? Elliott wave traders are different. They are very proud traders. So, what I'm trying to say to you here is that though we see like this, we say third wave, la la la, okay? But this is what we can say now. This is our primary wave count. That's what we can say now. So tomorrow, if the market came out with a different pattern, we must adjust our wave count. But the problem is that sometimes traders don't find it very difficult to adjust their wave count. They say, this is it. This is what's going to happen. I get it right. No. Please don't do that. Okay, don't do it. Okay. Don't get into that. So that's why I'm stopping here to highlight that point. Though at this point in time, this is what I can say, okay, because today, okay, 17th of April 2015, that's all I can say. But tomorrow, if the price we see now, instead of having a straight fourth area where we have a complex area where, well, we can come back again and continue our wave count. But the most important thing is that we are not violating the market patterns. Okay, because these are the market stable data. Okay, let's move on very swiftly because we don't want the video to be too long. I've been talking to you now for 11 minutes. Okay, so now suppose this is the end of the fourth area wave. Okay, at this stage. Okay, what can we do? So we see now that the third area wave is shorter than the first wave. All right, what is likely to happen to the fifth wave? This is about explaining the wave count, applying the wave count, interpreting the wave count, and trying to forecast the next price move as the first wave is extended. My friend, can you see? At this point in time, we are definitely sure, if we can speak like this, all right, talking about Elliott wave, we can say that the fifth wave will not be longer than the third wave. Why? If the fifth wave is, suppose the fifth wave is longer than the third wave, all right, okay, that will make the third wave the shortest motive wave, which is contrary to the Elliott wave rules. Are you with me now? So we are using the Elliott wave theory. We are interpreting the Elliott wave theory. We are deducting from the Elliott wave theory to make trading decisions. So as where we are now, according to the Elliott wave rules, there is a high chance. You know, always here, I learn it in trading because very often when you get very confident in trading and you splash in trade, you know, you put a lot of trade. And by the time you turn your back, it's all end up being a losing trade. The market is telling you something very important. Say, my friend, don't take me for granted. I am the boss. Okay? Gently. So, the reason why, okay, I say this to traders because it happened a lot through Elliott wave traders when traders they see the best setup and the dynamics of the market has changed due to economy news or due to market indicators or other things that is happening in the world, and traders say, what has happened here? All right, because human beings can change their mind and different things can happen. A market can be distorted, okay? A market can be manipulated. But I don't talk about market manipulation. I prefer to talk about market distortions for different reasons, okay? Due to high volatility or other things. So now, where we are now, according to the Elliott wave rules, the fifth wave should not be longer than the third wave. Otherwise, the third wave will become the shortest wave. So this allows me to conclude at this point in time that this stock, Amgen, American stock, Amgen, Epic, Alpha, Mike, Golf, November, AMGN, can you see on the chart, has a high chance, okay, to stop here at 261% Fibonacci, okay, extension zone, all right? So the price level, there's a high chance that it will find it difficult to go above the level of 18700. That's my conclusion at this point in time. But my friend, this is not an exact science, the Elliott wave theory, okay? It's a guide to look inside the price instead of looking at the price, and to make, okay, intelligent, okay, preparation, okay, to anticipate, okay, intelligently, okay, the next price move without getting too, okay, excited, okay. So, but when we are forecasting or using the Elliott wave theory, to avoid making wrong decision, one must use what I call the top-down trading method or multiple time frame trading method or trading dream without violating the market patterns. Once again, one will always combine the Elliott wave theory with the economy news and the fundamentals. That's my approach, okay? So, enough of my blah, blah, blah. So, at this point in time, because the first Elliott wave has been extended, and the third Elliott wave is shorter than the first wave, according to the Elliott wave theory, the third Elliott wave should not be the shortest motive wave. Therefore, we cannot expect the fifth Elliott wave that is underway to reach the red spot here, which is the, okay, in fact, it can reach the red spot because that's the equality between the third and the fifth wave. So there are two things that can happen here. Either, okay, the conclusion that we can deduct here to avoid that the third Elliott wave is the shortest wave, the fifth wave can be equal to the third wave, which will bring us here at a $214. In that case, there will be equality between the third and the fifth, and the third and the fifth wave. I doubt that a lot. I doubt it. I doubt it. Okay, I doubt it. We will see. I doubt it. Okay. All right. Either there is equality or the fifth wave is shorter than the third wave, to avoid that this third wave end up being the shortest wave, which is a violation of the wave principle. Ladies and gentlemen, we know when we are applying the Elliott wave theory, we are applying Elliott wave rules. Now, we must interpret the rules, but when we are applying the rules, we must not violate the three market pattern. One will also combine the Elliott wave theory with the fundamentals and the economy news. In this example about Elliott wave explained, step 1, we have a scenario when the first Elliott wave is extended. Now, we understand also that the third wave should not be the shortest wave. As the third Elliott wave is underway in this case, it can be equal to the first wave, shorter than the first wave, or longer than the first wave. As you can see here, it is shorter than the first wave. Now, because the third wave is shorter than the first wave, there is a high chance that the fifth wave will be shorter than the third wave or equal to the third wave. Because if the fifth wave is longer than the third wave, that will violate the wave principle, and the third wave will become the shortest wave, which is a contradiction to the Elliott wave principle. I hope you have learned something from this video also, okay? We'll put it to use to make excellent day trading and swing trading decision applying the Elliott wave theory. We are the TSTW24 traders talking about Elliott wave explained step 1. I invite you now to follow me in the next video when we'll be talking about Elliott wave explained step 2. If you like this video, please give us the thumbs up. If you dislike this video, please give us the thumbs down. Your rating is very important for us, and this will allow us to improve our recording. If you are in love with this video, and you say, Joe, you make my day, feel free, all right, to share it on Google+, on Twitter and Facebook, and even embed it on your website. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.